Good morning, everybody. This is Todd with the Forex Nitty-Gritty Insiders daily video. Hope you're having a good week. We're right smack in the middle here of trading this week with a little bit of interesting movements, and we're going to take a look at some of those in just a minute. I've got a 30-minute chart on here that we're going to focus in on, but I wanted just to bring up what news came out today. We had a couple of things that came out within the last hour for the U.S., the CPI numbers and core CPI and regular CPI. Both came in lower than the forecast of 0.2%. The core came in at a 0.1%, and the CPI number came in at 0%. And this is measuring the change in price of goods and services by consumers. And typically, we want to see those going up. The Empire State Manufacturing Index dropped to a negative 5.9, which is huge. The forecast was it to come out at 6.6. Anything above 0 indicates improving conditions. And, as we look at this number here, starting in November of this last year, the numbers started to get positive, and they have all been positive. In fact, 1, 2, 3, 4, 5, 7 out of the last 9 months that it's been reported, it's come out better than the forecast, but still all positive until today, which pretty much got crushed from what the forecast was. So 6.6 to a negative 5.9, definitely not going in the right direction. The long-term purchases, or the tick data, this is measuring the difference between the foreign purchases by U.S. citizens and the U.S. securities purchased by foreigners. Usually we want to see that number higher than normal, and it was lower than normal. So that was, the forecast was 41.5 billion, came in at only 9.3 billion. So quite a bit different. And then in the next minute here, we're going to have capacity utilization. And so I'm going to pull up the euro dollar here, and we're going to go to a 1-minute chart. And boy, you can tell a lot of things going on. And one of the things we're going to talk about today is just the volatility that we're seeing in the markets, the non-deliberate volatility, which makes it difficult to really get a good sense of what's happening. And so this capacity utilization is not a huge number, but on top of what's already come out, we may see some movement because of that. And right now it's just kind of chopping around. And that's, not a whole lot more going on today. So we probably won't expect to see too much. Tomorrow we do have the Philly Fed Index, so that's something to keep an eye on. And the heels of the New York Empire State Manufacturing Index. So we'll keep an eye on that. So not much movement's going on. While we're here, I want to point out, though, and the topic I want to address today is the idea of deliberately trading markets or deliberately trading charts, currency pairs. And you can see pretty clearly here the difference in how this was moving. We can kind of outline, even though it's not necessarily perfect in its movements, a lot more deliberate movements until we get right about here, where we get these big, huge candles and swings, and it's kind of tightening up here. And in fact, right now, from a price pattern perspective, we have maybe a little bit of a triangle starting to form. If you follow those, that would be something that we're seeing some consolidation within. Eventually, would anticipate some type of a breakout there. The other thing that I wanted to talk about in regards to deliberate versus non-deliberate markets, this is the 30-minute of the U.S. CAD, and you can see how we've really kind of run into this range here where we've had some pretty strong support that I'd imagine if that's broken, we have the potential of seeing a big move one way, or move to the downside here. But trading this type of market where it just is chopping to the side can be very difficult. And that's why when we deal with the rules for the simple trading method, we want to be able to identify something that is deliberately trading to the upside if we're going to go long, or to the downside if we're going to go short. So we want to identify that trend, and we want to preferably to be as deliberate as possible, meaning smooth in its movements, not so choppy. And then coming back to support, and then anticipating that move back up above the HH3 in order to look at entering into that trade. So try to go and look at the charts that you're dealing with and try to identify the deliberate nature of those, meaning are they deliberate enough in their movements that we'd be willing to take those as trades. And if you can look at that, and if you can identify those that are trading the most deliberate, you're going to be wanting to look at trading those for your simple trading method. So practice with that. If you have questions, feel free to let me know. If not, we'll be back tomorrow to see how the market continues, to see if it comes out of this non-deliberate movements that we've been seeing, and find some opportunities for trades. So until then, have a great day, and we'll talk to you soon.